I'm Mark. I talk a lot. It's kind of what I do. It's my thing, if you will. Guys, remember, this is an educational room. Hey, what's up, Jeffrey Dean? Thunderdome, that's what I'm talking about, Victor. Um, Guys, I teach you how to read indicators, specifically the T3 indicators. Miss Adriana, nice to see you in here. Nexgen software services, guys. They have been providing indicators, Fibonacci-based indicators, and education to traders for nearly 30 years. I sound like a derelict. I am a derelict, Jen, unless that means something else. Oh, I've never seen Doctor Who. I'll have to look that up later. Did that work? Is that better? Good morning, Miss Trina. The ladies are represented today. I like it. Guys, we're going to talk about reading indicators. We're going to have fun. And we're going to look at patterns. And we are going to talk about the good things happening on our charts. And hopefully you guys are going to turn those into trades, profitable trades. First, we check news, guys. News is important to check because news can make a market spike or jump, and we're looking for these high impacts. And it's funny to me, in Nexgen Pro Trader funding, you're not allowed to trade high impact news. Always fun, Tesla. And this is an awesome glimpse of the mindset of traders. The traders said, well, can't you just create a system that that automatically shuts down my position before news so I don't have to have the bother of worrying about it? And guys, I'm going to tell you right now, and forgive me for the Monday morning quick out of the gates, that's utter bullshit. Be in control of your trading. Be in control of your decision making. Be in control of your attention on the market. For the love of Pete. It takes a half a second to go to forexfactory.com to see when the news is and to write it down, guys. It's an advantage knowing when those releases are coming. Could save your bacon someday. So, sorry, I had to get that off my chest. Had to get that off my chest. Hey, will you just call me when there's news? No. We tell you every day, guys. We bring it up every day. We even send out freaking emails at the beginning of the week. This is when your news is. It's crazy. Cav, that'd be awesome, right? What if it takes the wrong 3 trades? That's the challenge, is what if it takes the wrong 3 trades? Man, Victor, that's awesome. Congratulations on the gaming chair. It'll change your life. It will. I can't live without mine. With my spine, so important. All right, guys, we're going to learn to read indicators. That's what I do. Sorry, I've already had my tangent. I'll try to not have any more. This is the whole goal of this room, guys. Nexgen's been doing this for darn near 30 years. Teaching people to look at charts, to recognize advantages, and then you guys make good decisions based on what you see. Whether it is NinjaTrader or TradingView, guys, we're going to use a checklist. It's only 3 rules. It's only 2 charts. Entry with sim already reach your day target on your account. Nice, Adriana. We'll look at it in a little bit. And the idea is that we're going to build this foundation, that we're going to start to see things, and we're going to say, wow, that's an advantage. That's good. That's powerful. That's helping. And guys, the advantages become your trade. And what you're going to find is that 90% of your day is doing nothing and sitting on your hands and waiting for those advantages. And active day trading is only about 10% of the day. And you're going to understand through your chart reading where the market is likely to continue and where the market is likely to go and where the market is likely to stop. And notice that I say likely because there really are no guarantees. These concepts become ways to enter. That sounds good, Wayne. Just let me know. And I'm going to try and scroll back and catch everything that you and Paul had in the middle of your conversations too. So when you get back, if I miss something from that group, dude, let me know, but I'm going to try not to. I'm going to try and get them all up on screen. Guys, likely to continue will become your entries. And when I say likely to continue, I mean you're literally going to look at a screen and you're going to say the trend is going that way. There's a little push against that trend. This is where that push is likely to fail. I can't wait to get into the market. That's the methodology on both platforms. Where the market is likely to go is a great place to take targets, to say, hey, I'm going to get paid there because with all these advantages, I don't want to get out too soon. And then where the market is likely to stop is what we call termination conditions. And these are literally areas that you will see long before the market gets there. And when it gets there, you may just say to yourself, well, I'm not going to trade into that line because that line could create a bounce. That's going to keep you in that 90%. If you are new to the markets, this is what the market does every darn day. The market creates a trend, up or down. There's typically a fight or multiple fights within that trend, and we're going to define where those fights are most likely to be lost. That's rule number 3 for the trend trades, guys. The market goes up and down, so you can buy when the rules are met, you can sell when the rules are met, or you can wait if the rules aren't met. The methodology is showing you where the fight is most likely to be lost, and if you can sit on your hands and wait for that fight, you have the opportunity to take a trade that you will be able to prove with a little bit of study typically wins 70 to 80% of the time. Learn the easy trades. You'll start to see more trades. As we go forward, we're going to talk about NinjaTrader and TradingView. They are apples and oranges. 2 different bar structures, 2 different time frames on the charts, guys. Very similar methodology, pinpointing where that market is most likely to fail and continue with the trend, but you're going to have to do it with different rules. So know which platform you're on. Either way, we're going to learn the rules. We're going to learn the rules for when it's okay to trade. And I'm going to try and keep this really simple. In my world, this is my world, it's a weird place. It's okay to trade when my rules are met. And it's okay to trade when my rules are met. And the cool thing is if these rules aren't met, I'm cool not taking a trade. And if these rules aren't met, totally fine not entering the market based on hope. Everybody in the room has the ability to simulate and practice. And guys, this is what makes this room great. When you practice, if you're brand new, you're probably going to make a mistake. In the heat of battle, you may not see something that was important to that trade. If you post your trades in class, you'll get feedback on everything that you do. Very often, when I look at your charts with a unbiased view coming from a seat that has nothing to do with your wins or losses, I can identify challenges that you may be having, maybe that you don't see in the moment. And when you post in my room, guys, you're going to get a private session. You're going to tell me how you read your indicators, why you did what you did, and we're going to talk about what I saw. Hey, I couldn't help but notice you jumped into a brick wall, right? I couldn't help but notice you were in super early or super late or held way too long. And it's just a private session to help you get better. That's all it is. The hope is that you don't practice the wrong trades. Very often, there's this phrase, simulator millionaire. And it means that you're on sim. Your balls are huge because there's no real loss factor, right? You can't hurt yourself. And you take these asinine trades, but your brain believes that the profits from those crazy trades are the perfect trades. And then you go live, you're like, I'm so good at this. And you go live and it's like luck runs out instantly, guys. And it's funny. It's like they have cameras behind you. So try not to practice the wrong trades. Really focus on having the correct rules because your rules provide an edge, guys. They're a pattern that can be proven to win more than it loses. If you simplify, and when I say simplify, it says simplify to 2 trades. Guys, I hand you a plan for both platforms, and I'll tell you what, I'll do that right now. I'm going to hand you plans for both platforms. I'm also going to hand you spreadsheets for both platforms, and I'm going to hand you the PowerPoint I use to teach each and every morning. These plans that I hand you, these are stepping stones in your learning journey, guys. These are designed to teach you to read your indicators. That's really it. This is not the end of the road. This is the beginning of your journey. And the trades on this plan, they're designed to optimize your chances of success. They have been proven through study, through simulation, through practice. They have been proven through pictures and countless hours to be proven to win more than they lose. And then when you go through and you do some study and simulation and you get that class feedback and you practice, you're going to ultimately write a plan that suits your needs. And it's going to be based on your ability to read the indicators. Because once you start to talk to yourself in terms of advantages, you begin to see more. The market slows down. You find these patterns that are pretty outstanding. So there's plans for both. And then the second way to get where you want to be ASAFP, my friends, is know the patterns you're looking for. So this is the Ninja Trader spreadsheet. In green, what it means to have the rules met for the high probability trend trade. Hundreds of client pictures that you can look at, the exact same pattern coming together. There's a place to build your plan, and there's a trade tracking sheet. The same is true for TradingView. Pictures of what it looks like to have the rules met, a place to put your pictures, and a way to track your progress. And that's where the posting in the room comes in handy, because if you wake up every morning and you look at this sheet and you say, okay, I took these trades and I annotated my charts, and this is what Mark had to say about them. Mark says I keep trading into termination conditions. Mark says I keep jumping in late. Yes, guys, give me a Y if you can hear me. There we go. Let's get him. Let's get some ears on this guy. He's missing the good stuff. Guys, if you ever can't hear, tell me instantly. Let me know so that we can fix it. Jen did that first thing. She called me a derelict or something. I don't know, something hateful. But then we just rebooted and we were good. So, guys, this is where you're going to recognize the challenges that keep popping up, taking money out of your account. I'll see them from where I'm sitting. I'll point them out to you, and we'll talk about a way to fix them. So keep it simple. Know the looks. Practice the patterns. Know what it looks like to have your rules met. And then we're going to start off with Ninja Trader. And Ninja Trader is only 3 rules, as advertised. When a rule is true, when you say to yourself, hey, my large chart does have strong triggers, you have the advantage of momentum. And now momentum, I want you to picture it as a freight train. And freight trains are hard to stop. Some elevator music. Okay, hold on. Look down here. Let's see if we can get him. Sometimes we just got to talk through typing, right? I don't ever want anybody to miss out. All right, so we're going to talk about Ninja Trader first, guys, just because it's been around longer, seems respectful. When I have momentum, it's a trend that is already established that's going to be very difficult to stop. And then I couple it with rule number 2 that says no termination conditions. None of those areas likely to stop the market. I'm going to take to that trend that's going to be difficult to stop an omission, an absence of areas that could create big ugly bounces against my move. And then finally, rule number 3 is going to be used just to pinpoint that perfect entry where the market is most likely to bounce and continue with the trend. These 3 rules only take 2 charts to prove true. We use a large chart. If you are an S&P trader or a crude oil trader, it's a 13.2, and all that is a description of the bar structure, these dynamic Renko bars. Let's just call it the large chart because I'm not a technical guy. Large chart's a slow-moving chart, guys. It's a glacier. It shows the overall opinion of the market, if you will. It shows the trend, the direction that the market is moving. It shows you the momentum, and that's rule number one. And it also shows you areas that could be problematic. That's rule number two. Rules one and two are met on a large chart before we ever go to a small chart to look for an entry. But when the rules are met, when I have the advantage of momentum, when there is nothing in the way, the market will be trading low on that bar in this downtrend. Your small chart will show you that fight that we talked about. Your rules for entry, rule number three, will pinpoint where that fight is most likely to be lost. This becomes your entry for the highest probability trend trade. By using this refinement chart, the smaller chart, you're going to be able to reduce risk dramatically. And it's also going to put you into the market further away from your targets. So that's going to increase profitability, guys. These tails on a large chart, single bar event, these tails are that pullback. We're going to take the next 20 or 30 minutes to learn how to pinpoint right where that tail is most likely to form. We use these two charts because if you remember who's in charge, it makes it easier, I think, to learn these rules. Your large chart is a big crowd, the huge crowd, the institutions, the money people, the 1%, big brother, the man, I don't care what you call them. But these are the folks that establish trends, and they create momentum, and they react at areas. And if we just learn to stay in their good graces with rule one and two, we begin to cheer on the small crowd, the people on the small chart, because they create the fight, the little retracement counter to everything that the large chart wants. And we're going to use rule number three to pinpoint where these yahoos are most likely to fail. And that becomes your entry for the highest probability trend trade ever. Good morning, Miss Anna. I see you sneaking in here. Hope you guys are safe up there in the weather. We're going to use indicators, guys. The Nexgen T3 indicators. Been around for darn near 30 years. These things are worth their weight in gold. Both charts will have what we call areas. And I want you to think of areas as horizontal lines that can create a bounce. That really is about as technical as you need to get. They do have names. Wouldn't hurt to learn them. Divergence highs or magenta lines, divergence lows or cyan lines. Anytime you hear divergence in this room, it means there was a loss of momentum at a pivot. You're going to see Fibonacci resistance, Fibonacci support, yellow 1-to-1s. Areas are bouncy. That's your lesson here. Areas are bouncy, whether it's the big chart or the little chart. We're also going to use triggers, and we're going to use triggers in everything that we do. There are small triggers, which are the two solid lines working together to create the small triggers. There are large triggers, two dashed lines working together to create the large triggers. These are moving averages. Okay, right? Sounds like math. Small, large. When they're green, they're up. When they're red, they're down. We're going to use these to define momentum. We're going to compare those areas, those bouncy lines, to these triggers to make sure that we're not trading in determination conditions. And we're going to use those large triggers to pinpoint our perfect entries where the small crowd is most likely to fail, where the market is most likely to bounce and continue in the direction of the trend. And we're going to do all of that with three very simple rules, guys. Now I'm going to tell you, because I like to tell, learn the rules individually. The recipe for a trade is momentum plus a clear path plus an entry area. That is the perfect trade. That is the high probability trade. That is the trade that you'll be able to prove typically wins 70 to 80% of the time. The focus that you put on learning momentum and clear path, understanding when there's nothing in the way, this is your core. This is your foundation. These are the two concepts that open the doors for the rest of the trades that Nexgen teaches, and very often for the trades that you guys begin to create on your own through your chart reading. So we're going to take the three rules. We're going to break them down individually. If you look at the spreadsheet that I gave you, each rule is in green. You have annotated pictures of what it means to have that rule meant. I would encourage you to add to this list. Start taking pictures yourself. Because when you have strong triggers, the market's going to be hard to stop. So, large chart. Must have strong trigger lines, guys. Background on the large chart is going to tell you which direction you're looking for rules to be met. Green is up, red is down. That's it. That's your trend. It's that easy. Unless you're colorblind, and then it's not that easy. Let me know. I know a fix to that. When your large triggers and small triggers are green as well, you're capable of having strong triggers. When your small triggers and large triggers are red, like the background, now you can have strong triggers. If the colors don't match, whether it's one another, whether it's with the background, rule number one's not met. It's like a little safeguard. Strong triggers in an uptrend means that your small triggers have broken above and away from your large triggers. There is a space that's created between the two sets of triggers. That space equals strength. That's strong triggers. That's when the odds are favorable for the market to continue up. In a downtrend, small triggers below the large triggers, space between the two. It's that gap between the triggers that lets me know that the odds are favorable for the market to continue down. That's odds favorable momentum. Guys, strong triggers, that separation, whether it's a little bit or a lot of it, means that the trend is likely to continue in the direction it's already going. This is the look that helps break key areas. This is the look that covers mistakes. Your triggers are going to look like this when we're pinpointing where those tails are likely to form right inside of those large triggers. And if separation is strength, no separation is weakness. That's the opposite of having your rules met. That's your 90%. That's sitting on your hands. Because when you have weak triggers, anything can happen up or down. That's when the market tends to retrace from the middle of nowhere. That's when key Fibonacci areas are more likely to hold. Weakness, no separation, Fibonacci support creates a giant bounce. Weakness, right at support, there's your big bounce. Weakness from the middle of nowhere, there's your first look down. And then when you have strength, I'll be darned, that market seems hard to stop. We're going to come back and look at this circle because that's probably the perfect entry. And we're going to come back and look at this circle because that's probably the perfect entry. But rule number one is only one rule, guys, and it's found on the large chart. There's another one of those tails. Wow. And it is in the moment. The most current bar will define that momentum, guys. So here, my background is green. My small triggers are green. My large triggers are green. Smalls are above the large. There is space. You could say, yep, rule number one is met, but I want you to see these darn lines, and we're going to talk about why those are important as soon as you guys let me know that you're cool with momentum. Does that make sense? Separation is strength, whether it's a little bit or a lot of it, guys. This is rule number one, met. This is rule number one, not bet. Keep it very black and white in the beginning, guys. Has nothing to do with bars, has nothing to do with areas. Momentum is one advantage. That's it. It's 1/3 of the equation. When you have it, if you have it, because you have it, I'll go make sure there are no termination conditions in the way. I'm going to make sure that there's none of those horizontal lines on a big chart that could create a bounce. If you remember that the large chart or the large crowd reacts at areas of support and resistance. This is where buyers buy and sellers sell, guys. This is where fights happen, where reversals tend to come from. Then it becomes easy to understand how to identify a termination condition. Rule number one, or the first step in the two-part step, is price reaches the area. Your dynamic Renko bars make it to Fibonacci resistance, or your dynamic Renko bars make it to an area of support. And when price reaches, all you have to do is ask yourself, where are my triggers? That's it. If all four trigger lines, both lines of the small, both lines of the large, remain below resistance or above support, that's the recipe for a termination condition. 0 triggers through, that's a termination. Rule number 2 is not met. No trades into the area. Because there's 3 things that could happen when you reach an area and the triggers don't break. Ultimately, it could break. Areas break all the time, but usually with momentum. It could reverse the market completely. it could break, or it could even create a fight between the buyers and sellers that you just don't want to be a part of. The truth is, you'll never know what the reaction's going to be. So rule number 2 says, hey, pump the brakes, sit on your hands, wait for the reaction, let the large chart get their poop in a group, and then get back to work. So rule number 2 says, price reaches an area, no triggers break, absolutely no trades into the area. And I'm telling you right now, it will save your bacon more often than it does not. I mean, look at that. They respect areas because the large crowd created these areas. The large crowd created the price action that gave us that divergence high, that created Fibonacci support, that got us that resistance. And if you learn that simple lesson, there's just no reason to trade into an area when none of the triggers break. It's going to keep a lot of money in your account. But they do break. It's important to know what it looks like when it's breaking, but it's more important to know that if price reaches a line and none of the triggers break, it's better, more advantageous. You have a higher chance of longevity in this game by doing absolutely nothing into that area. If 2 of your 4 trigger lines get through the area, and it takes 2, not 1, if 2 of your trigger lines get below support with momentum, 2 smalls below, 2 large above, this is what we call a 50-50 look. Pretty clever, right? 50% of the triggers are below, 50% are above. This look says, hey, guess what, Pete? That area's got the potential to break. Tesla nerd, the potential is there. That's the second trade on the plan that I give you. But guys, 2 triggers is really kind of a meh potential to break look. That's a technical term used in the trading industry. It really takes 3 of the 4 trigger lines below that area before I start getting excited about taking the second trade on the plan that says, hey, with that potential to break, there is a recipe for getting the best of the best entry that optimizes your chances of success. But once 4 trigger lines, not price bars, not the change of color, once all 4 trigger lines get below support, support is considered broken. When an area of support breaks, very often it will behave as resistance. Your path is clear. Rule number 2 is met. And guys, rule number 2 will remain met until you reach the next line. And when you get to the next line on your large chart, you have to go back to number 1. Everybody good with that? And I want you to see, once again, weak triggers at a fib and it holds. Not even 2 triggers through and it holds. Weak triggers at a fib and it holds. Weaker triggers in the middle of nowhere and there's a big bounce. Maybe 2 triggers through and it holds. Weak triggers at a bottom. There we go. 2 triggers through. Not your best look. It didn't break. 2 triggers through. Not your best look. It didn't break. No triggers through directly into a fib. That's a sexy top. Let's look to go the other way. And all the way down. It started with weak triggers at a fib on Friday afternoon. Pretty cool, right? Guys, if you learn the very basic rules, it will force you to be a little patient. It really will. But if every time price reaches an area, you start counting triggers, it's going to keep you out of a lot of trouble. So this is your cheat sheet. And guys, I gave you this PowerPoint. 0 triggers. Rules say no trade. It's up to you. Some of you might trade anyway. 2 triggers with that momentum. The rules still say no trade in the KISS plan because that's not your best look for a breakout. 3 triggers says, all right, the potential's there. It's starting to look good. But yellow, meaning caution, it's still not a clear path. You're going to need to manage that trade a little more assertively than you would a high probability trend trade. But when 4 triggers are through, the angels sing, the heavens open up. Guys, with that momentum and a clear path, you can't wait to look for an entry. This is your best case scenario, guys. That's where the easy trades come from. And I even have a picture that's called easy. And that picture says the easiest trades you will ever take with this software will have momentum, absolutely nothing in the way, and you will pinpoint right where that tail is most likely to form, right where that fight is most likely to be lost, so that you can ride that wave of momentum with nothing in the way down to the next key area. That's the goal every day. That's the hope every day. So we're going to do it, and we're going to take that momentum, and we're going to take that path, and we're going to go find an entry. But first, I'm going to be the bearer of bad news for you adrenaline junkies. There will be times when your path is not clear because of stacked areas. There will be times when you don't have the momentum you need to even look for rule number 2. Guys, this is 90% of your day. There is so much waiting in successful day trading. We are professional waiters. But it's okay because the futures markets trade on average $220 billion hourly. The S&P, which most of you trade, averages $174 million exchanged a day. For you NASDAQ traders, it's closer to 270. It takes $400. That's it. $400 a day consistently times 252 trading days in the typical year to create a 6-figure income based on your trading. The methodology that we're talking about right now is everything that you need to be successful with this software as a brand new user. And if you could follow this plan and have an inability to capture $400 to $500 a day, I would be floored and flabbergasted. True story. So let's do our flow chart. If my large chart has strong triggers, and it does, then I will look for termination conditions. And if there are no termination conditions and I have room to profit targets, then I will define my entry. Then and only then will I go define my entry. And the entry rules are super specific. Or if you're 3 years old, super specific. Guys, they're so specific that you're going to use a limit order. You'll wait for the market to come to you. And you're going to use that limit order to buy or sell a pullback. That's that small push against the large chart trend, and that's going to start with a reversal bar. And you're going to buy or sell that pullback at an area, at a fib, at a midband, at a yellow 1-to-1. Remember that list. Areas are bouncy. We want it to bounce in the direction of the large chart advantages, but that area needs to be inside of triggers. So I want everybody in this room that's struggling with entries to learn this phrase in one breath. I'm going to use a limit order to buy or sell a pullback at an area inside of triggers. And if you do that, you won't miss your entries. And if you do that, you'll know where your entry comes from with such accuracy that you'll wait for it with a limit order. And it's just a pattern. Have I mentioned that everything I do here is patterns? Same thing. If you're taking a trend trade long, it's going to look like this. If it doesn't, you didn't take a trend trade long. How easy is that? Guys, when the large chart says up, and then the large chart gives you momentum, and the large chart has nothing in the way, you will be absolutely sick of it, worried that the market is going without you. This is where the belief that this pattern comes true pays dividends, guys, because if you jump in up here, you're more likely to sit through some nonsense. You're going to wait for a reversal bar, because the reversal bar signals the beginning of the pullback. The reversal bar is not your entry. This is actually a loss in momentum. So if you couldn't hold your water and just jump the fudge in somewhere over here, that's a pretty solid exit. But those jump the fudge in trades with all those advantages typically turn into trend trades anyway. Reversal bar says, all right, the fight is on. You will be able to know exactly where that fight is most likely to go looking at these large triggers. There's 2 sets on your entry chart. The smooth ones, well, those are native to the entry chart. You can compare those to the small triggers and say, yep, I've got momentum on a smaller time frame. The step triggers are the large triggers from the large chart. And this is where the idea of moving averages comes into play. I learned this. This is pretty cool. Price returns to a moving average. It is regression of the mean. So these trigger lines define exactly where that retracement is most likely to go, somewhere from the top line to the bottom line and anywhere in between. But triggers aren't bouncy, so the trigger lines aren't your entry. I see you guys posting charts. Put my limit order right at the trigger lines. You know who you are. Entries come from areas inside of triggers. Fibs, midbands, yellow 1-to-1s, because areas are bouncy. Areas can ricochet the market in the direction of those advantages. Sometimes you'll have multiple areas. It creates a window, a little indecision, right? Well, you're going to activate your limit order at the highest point of support, and you're going to say to yourself, because my large chart is a freight train of emotion north with absolutely nothing in the way to stop it, I'm not gonna miss this trade. I'm gonna get in as at the highest point, and because I'm in here, and I know that the market could retrace to the bottom, I refuse to panic if it does. And because I know it could bounce off of this area too, I refuse to panic if I see negative numbers. I don't ever panic. And if they push through everything, good, and they get beyond those triggers, 4 or 5 ticks, your KISS plan says that's where your initial stop goes. That's where the market shouldn't go if this is going to be part of that 70 to 80%. And 20 to 30% of the time, you're going to pay rent. 20 to 30% of the time, the market's going to be wrong, and this is going to be a cost of doing business. Once you get below the triggers in an uptrend, you don't know if, when, or where that market is going to stop. You will gladly accept the loser rather than a bigger loss, guys, but you're going to taunt them and say, if you want my money, this is where you're going to have to get me. Absolutely no entries are taken from below the triggers for a long trade if you're following the KISS plan. Now, when the market is trending down, I don't care. Don't worry about my 401k because this is futures, and all we got to do is trade the pattern upside down, guys. When the trend is down, when the momentum is strong, when the path is clear, my job is to wait for a reversal bar, to wait for the fight. But that's not my entry. That's a little loss of momentum to get me to the good stuff. I know right where the retracement is most likely to go, bottom to top line of the triggers. I know right where that retracement is most likely to bounce and continue with the large chart at an area, fib midband, yellow 1-to-1, inside of triggers. And I'm confident in activating my limit order just below that lowest point of resistance. And if they blow through the good stuff, guys, they're going to hit my stop. And my stop will be 4 to 5 ticks beyond those triggers where the market should not go. Because if they get through everything good, I don't want that trade. My advantage is gone. It's no longer giving me an edge. I willingly take that loss. And I say to myself, next, bring me the next entry. Because I've got to take 10 to 15 of these and create a sample. I'm not letting one trade define what I do. Anything that wins 70 to 80% of the time is obligated to lose 20 to 30% of the time, guys. It is a normal part of a positive equity curve. Show me a trader that wins 100%. I'll show you a trader that's lying through their teeth, guys. I've never met one. Not in all my years with Nexgen. I've never met a 100% trader. People will lead you to believe in this room by only posting winners they are. But I'm going to tell you guys right now, learning where the market shouldn't go is going to help you tremendously. Management is where the money is made. So it's a pattern. And it's the same pattern. It is momentum first, and then it is at least the potential to break. And then it's a pullback to an area inside of triggers. And this is what it's going to look like all together, guys. This is what it's going to look like if you go to that spreadsheet and start clicking on these. Watch this. I'll just click on a random one that says best of the best long. What's it look like? I'll be damned. It looks like momentum, potential to break, and a pullback to an area inside of triggers. That looks like something out of the study material. No way. Let's try a different one. Carl's perfect long. Well, that looks like momentum and potential to break and a pullback to an area inside of triggers. Uh-oh. There might be something to this, my friends. Hold on. Can we do it the other way? Hell yeah, we can. Momentum, nothing in the way, pull back to an area inside of triggers. So when I tell you guys this is patterns, I really do mean that it's patterns. Whether it is November 6th, 2025, whether it is crude oil in 2021, whether it is the S&P in 2022. If you learn the pattern, the market slows down. If you learn the pattern, you don't miss your entries. And if you learn the pattern, you begin to recognize where that market tends to go when the pattern is true. So that's Ninja Trader. Do it every morning, guys. Say the same thing every morning. Learn the advantages, turn them into a trade. Are there any questions about the high probability trend trade? Any questions about momentum, counting triggers to define path? Any of the good stuff? No? Awesome. Let's talk trading view then. We're going to get through these rules. We're going to look at a live market. We're going to get you guys feedback. Trading view is different, similar, but different. Trading view is so different that it only has 3 rules for the high probability trend trade. But because I am not the sharpest tool in the shed, the first 2 rules are exactly the same, just on different time frames. So 3 rules, 2 charts. That's it. Guys, we have broken this high probability trade down, regardless of platform, to the bare bone minimum to find success with the trade. Lean on that minimalistic approach, guys. Your large chart is a 15-minute chart. I could get up and walk away for 15 minutes. You guys would put my face on a milk carton. That's a long time. So we're going to use the 15-minute, the big chart, the large crowd, to define direction, momentum, targets, and terminations, areas that could stop the market. We're going to use the 1 minute to define the immediate strength of the move. That's these small triggers. And define our entry point, that spot right where the fight is most likely to be lost. So big chart, little chart, advantages entry. We're going to use indicators. Your large chart has triggers. There's cyan up, white down. Your large chart in trading view, because it's so slow, it doesn't use the large triggers. You're welcome to if you like. It's just noise that's going to confuse you. Because if you have the large triggers, it's going to put a background color on there. And if you believe the background color, the chart's too slow. It's going to deceive you. So I've stripped all that nonsense off of your large chart. Your small chart will use small and large triggers. Now, for the trend trade, you don't need the large triggers. But the second trade on the plan that I give you is a momentum trade. And you will need to do a comparison of small to large to gauge that momentum. So that comes into the second trade. Still no background colors, because who needs that kind of distraction in their life? And then areas. Have I mentioned today that areas are bouncy? As soon as you believe that, it makes life easier, guys. Areas are bouncy. They all have names. I did give you this PowerPoint. I would encourage you to know that one-to-ones can be used for targets, terminations, or entries. But a divergence high can only be a target or a termination. Know which ones are used for entry on the small chart. Know which ones are used for terminations. And then let's just get to the easy stuff. Define trend. I can't take a trend trade if I'm not trading with the trend. That's it. It's impossible, right? And then once I define my trend, rule number 1 says that my big chart, my slow chart, my overall view of what the market's doing chart cannot be trading directly into areas. I have to have room to targets. And then it says, well, if you have the trend established and there's nothing in your way, there shouldn't be anything in the way on the small chart either, because small chart areas can create bounces the same way large chart areas can. So your first 2 rules are dedicated wholeheartedly to keeping you from trading into brick walls. And then once the rules are true, you're just going to buy or sell a pullback in an area with a close on the weak side of the triggers. That's the little twist here on TradingView. So let's go through and define trend. Everybody good with up or down? Because that's it. Those are your only 2 options. The triggers are either up, you're in an uptrend, looking for rules to be met for trend trades long, or your triggers are down. You're in a downtrend, looking for rules to be met for trend trade short. Pretty easy, right? Once the trend is established, rule number 1 says, please, oh please, don't trade directly into an area. Don't take an entry 2 ticks from an area that could create a bounce, because when it creates a bounce, If it creates a bounce, it's going to pull you out of that trade and suck money out of your account. Room to targets on the big chart. Guys, I refuse to leave my big chart if I don't have room to targets. And then you go to your small chart, and from wherever you're taking your entry, you can't trade into areas. That's rule number 2. Don't trade directly into an area. Areas create bounces. But Mark, shouldn't that area break? No, areas shouldn't break. They have the potential, but when you start using words like there's no room but, it should, it will, it has to, guys, you're pulling one of these bad boys. This is what it looks like when you trade into areas more often than not. For those of you that can't read the license plate, it's "Oshit," which is what you're going to say when you lose that money. Areas can create bounces. So once you have room to targets, guys, and you've got to know where your entry comes from to make this happen. We're going to go define the entry. We're going to make sure. Guys, give me a Y if you can hear me, please. Everybody good? Thank you for that. When the rules are true, this is your entry pattern, and it starts with the small triggers turning against you. So if my trend is up and my small triggers on my large chart are up, as soon as they turn down, that's the beginning of the pattern. If the small triggers don't roll against you, you're not taking a trend trade. You're trying some other trade that isn't a trend trade. And once the small triggers roll, you've got to pull back to an area, whether it is support up here, mid-band, one-to-ones. And when you get to that area, there's a very specific look that initiates the trade. It's an up bar, a reversal bar up in the direction you want to go, where both corners of that bar finish above the small triggers. This is the weak side of those triggers. This is where reversals tend to come from. So you'll notice everything was going up and the small triggers roll and it reaches support and there is absolutely no entry given. And then it comes lower and there's your entry. Small up bar closing above the small triggers. And this is where the small chart reverses to go in the direction of the large chart. Guys, your entry is very specific. Rule number 2 says don't trade into a wall of anything. So when you get this close, there has to be room to trouble. And it looks like this. Here's your pattern. Smalls are up. Trans we're going to talk about in just a moment. And I have room to targets, which means that my large chart rules are satisfied, which means that I'm going to turn my attention to the small chart, which means I'm waiting for that roll in the triggers. I'm waiting for my small triggers to turn down. So the immediate strength of the market is pushing down. And once those roll, I'm looking for an area. And until the market reaches that area, my rules for entry aren't met. So if they try to head fake you a little bit before they reach, that's not your entry. The rules are very specific. It's a very specific phrase. Because the smalls rolled down, my rules say wait for a pullback to an area with a close on the correct side of those small triggers. This is where your 1-minute chart is most likely to bounce and reverse in the direction of large chart advantages. In a downtrend, first it's down. We'll talk about what strong side means in a second. And there's room to targets. The only way I will ever go look for an entry. And then notice that I wrote the exact same thing going the other way. Because the small triggers rolled up, I have to wait for a pullback to an area, a higher area. And then I'm waiting for the down bar. And the down bar must close on the correct side of those small triggers. And sure enough, that's where the small chart reverses and continues in the direction of the large chart advantages. Guys, every trend trade you take should look the same. Sometimes it's a shorter pullback to an area. Sometimes it's a bigger pullback to an area. But the language never changes. It's a pullback to an area with a close on the correct side of the triggers. And then that transition strong side. This is the first step in management. So on trading or on NinjaTrader, where the market shouldn't go is your first step in management. This one's a little different. Management starts with a comparison of the most current price on your large chart to the small triggers that are defining your direction. And there's 3 spots the most current price can be: left, right, or inside. That's it. Those are the only options. Whether the market is going up or down, it is left, right, or inside. They mean the exact same thing. If you are on the left side of the triggers, this is the strong side of the triggers, guys. This is the giddy up. This is the bigger moves. This is where 1 minute areas are more likely to break. 1 minute areas are not obligated to break. So if you're one of those people going, man, F rule number 2, I'm on the strong side of the triggers, it's your right to take that calculated guess, but it's probably going to lose more than it wins. If you are to the right side of the triggers, this is what gets you guys a lot. When you're on the right side of the triggers, you're on the weak side of the triggers. And guys, if you look at a big chart, let's just do this. If you look at a big chart, what you're going to find is that reversals come from the weak side of the triggers. But because these are 15-minute bars, a lot can happen in a bar. You could literally go from the weak side to the strong side in 1 bar. So we're still looking for long trades. It just means that if we get to a 1 minute area, that 1 minute area has a higher chance of creating a bounce than just arbitrarily breaking. It's a great place to take profits, to get the fudge out of that trade and wait for a better opportunity, one with a little more space, or just the next opportunity that's coming. If you are not strong or weak, you are in transition. You are trans. I hope that doesn't offend you. I kind of hope it does. Who knows? If you are in transition, it means that you're aware of the next area. You know it's there, and maybe you're going to take profits there, but you're not willing to get out yet because it can go from transition to strong when everything is great. I'll take profits. I'll go to break even. I'll sit on my hands and see if that area breaks. And if you learn this little list right here, you'll always know how you're going to manage your trade before you ever enter your trade. Pretty cool, right? And guys, that's it. That's the first hour. Welcome to Nexgen. The triggers are up. I'm on the strong side of the triggers, but I have absolutely nowhere to go. I'm already at trouble, which means couldn't care less what the small chart says. The small chart's already showing the reaction off of trouble. That's not my trade. My rules aren't met. If I go back to, this is still crude oil. They still haven't made it. Look at this, guys. From support to resistance to divergence low and support, back to resistance. Rule number 2 will define consolidation. Rule number 2 will keep you out of that consolidation. But when rule 1 and 2 are met, does everybody see the circle? Boom, boom, boom. That's the tail. What's it look like over here? Let's find out. Holy crap. It was a pullback to an area right in the retracement zone, and all the money in your pocket up to Fibonacci resistance. There's no way this pattern's worked more than once today, right? Because I have to cherry pick. Nope, mid-band, right inside of triggers, down it goes. Areas inside of triggers, down it goes. Pretty cool, right? Guys, that's your pattern. That's everything we talked about. That was 3 freaking winners in crude oil. Hang it up. Go play golf if you're not in the snow. But it means you got to sit tight when it's not perfect. It means you got to sit on your hands. You got to wait a minute. You got to be calm. You got to be cool. You got to be collected, because when it works, it's amazing. When it sets up, it's outstanding. But when you try to force it, it's less likely to do good things for you guys. Are there any questions about either platform? Any questions about NinjaTrader using dynamic Renko bars? Any questions about TradingView using those 15-minute bars? Guys, the areas are similar. The methodology is similar. Your job, should you choose to accept it, is to keep it simple. Know what's working for you. Here we go. So NinjaTrader. When you have momentum, clear path, and entry, if every time you look at your chart, you address these three concepts. Take this picture. Oh my gosh. Take this picture, print it out, put it on your desktop. And when you see momentum, path, and entry, say to yourself, this is a high probability trend trade. I'm taking this trade. And if one of those advantages is gone, you have to say out loud, this is a medium probability trade. Most of my indicators line up. It's not perfect. I might have to manage it a little more assertively. And if you see 2/3 of them gone, there's going to become a point in your life, maybe not as a brand new user because you'd rather be accurate or active than correct. There will be a point where you say, shit, this is low probability. Why would I risk my money on something that I know before I ever take it is a low probability trade? Some of you will take some of these, manage them really assertively. Guys, you're in control of the entry. You're in control of whether or not you pull the trigger. You're in control of how that trade is going to be managed. If you start focusing on what's working for you or against you, you will make better decisions. If all you're focused on is the money from your trading, you are more likely to just blow through accounts like it's going out of style. Process yields results. If you're on TradingView, direction, clear path, define your entry. If it's all three, guys, that's the good stuff. If it's only two, that's the, we still might be able to do some good here. And if you only have one of them, really, why? Why on earth? I can't figure that out, but I've done it myself. So, and look how quickly the market changes. Guys, I'm going to take 5 minutes. After I do this, I'm the worst at leaving. I know that I am. When I come back, we're going to look at the charts that are posted. So if you are on NinjaTrader, this is what I ask from my new users, from my experienced users. This is what I ask because this is an educational room and my job is to make sure that you're reading the indicators correctly. I want you to go through momentum and I want you to say, Mark, I had strong triggers, I had weak triggers. That's where you're going to get. If you're learning these rules and really committing them to memory right now, I want you to say the smalls are below the large, the colors match, this is strong, rule number 1 met. I want you to take the time to type that out because what you're doing is you're creating this little neurological connection. Yeah, I did the research. What you see and what it means to you. And the more times you do that, the faster your reads happen. When you talk about your path, and I want you to talk about your path, I want you to count triggers. 3 triggers through, it's only potential. I may have to manage more assertively because when you do that, you read that faster. You know it's not perfect. You're ready to manage. And then talk about your entries. Pull back at an area inside of triggers. If you changed your entry rules, talk about why. This was one of my trades, guys. I waited for a reversal bar. Actually, I trade the NASDAQ. I only enter on reversal bars. But because of the divergence on the potential to break, I chose to get in on the good side of the triggers. I took half off at the first sign of trouble because it was medium probability, and then I took the rest off with a trailing stop. If you give me this information every time you post in my room, I will give you everything that I own in this rattly old head of mine to give you the best feedback and a nudge in the right direction if you need it. If you're on TradingView, I need you to tell me direction. Talk about strong, weak transition. Let me know that you knew you had room to targets. And guys, use this phrase. Small triggers rolled up, so I need a pullback to an area, then a down bar that closes below the small triggers with room to trouble. Learn this phrase. You'll stop jumping in right here thinking it's a trend trade, right? Learn this phrase. You'll stop selling those one-to-ones hoping they hold without a close. And as we go through some of the charts today, you're going to notice how language could have saved a lot of bacon. So do me that favor. Every time you post in my room, I either want you to give me this one on TradingView, and guys, I know what your charts are doing, and I even know the emotional roller coaster you're going through. It's for you, not for me. Because when you do take the perfect trade, you've written out the recipe for success, and that's kind of a big deal. So, weak triggers, clear path, no areas inside of triggers. 2 out of 3 are missing. Guys, if the market goes up, that's cool. It goes up without me. Not my trade. No momentum, no clear path, couldn't care less about an entry. No rules met. That's how long it takes. We're in the 90%. Triggers are up, strong side of the triggers, all sorts of room, nothing but daylight. So what do I need? I need a pullback to an area with a close above the small triggers. But look, both of my triggers are going up. I haven't even gotten the roll yet. Got a little bit of waiting to do, guys. Got a little bit of waiting. So I'm in a position on 2 platforms, 3 rules, 2 charts, where none of my rules are met, and I choose to do nothing. That's it. That's day trading. All right, I'm out of here. I'll be back in about 5 minutes. If you have a chart, post it. If you have a question, post it. Khalid, are you in? Do you have volume now? Can you hear me now? And guys, remember that as we get into the second hour, I'm not the trade police. And I thought about this over the weekend. While I'm not the trade police, I'm not here to tell you that you should or shouldn't have. I am here because you're here. And if you're one of my more experienced users and you're looking for that accountability to stay consistent to your rules, I'll point out if you are deviating from the plan that you have shown me that you're trading. And I don't do it to call you out. I do it to make sure that you know that you're breaking your rules. If you change your rules, tell me. And I won't do it. If you don't want to be held accountable for your trades, don't post them in the room. And it's hard to get feedback if you don't post in the room. So you are opening the door for me to tell you everything I see the moment you post. Don't get your panties in a wad. All right, guys. I'll be back in 5. Talk amongst yourselves. Is everybody familiar with the siren song? Luring sailors to their death, crashing on the rocks. Guys, on your large chart, there was no momentum. Rule 1 not met. On the large chart, there was no clear path. Rule 2 not met. And this is why it's so imperative that you learn these first 2 rules, guys. Because if you took that entry believing that that blue line was going to magically break for you without momentum, you just took a loser. This is what we call avoidable losses. Avoidable losses are the reason most of us lose money in our accounts. Because if I take the perfect trade and make $300 on it, I just undid it with a trade that I should have never taken. And you'll find that avoidable losses suck. There's no reason to take them. Wayne, are you back yet? Guys, I try to not miss pictures. If you guys post heavily over the weekend and you're going back and forth and there's a ton of banter and you need feedback on pictures from Saturday or Sunday afternoon, I want you to do me a favor. I want you to post them. I want you to repost them on the most current day, because I'm all the way back 2 days ago clicking on charts that are posted, which is cool, but it's easier if you bring them to the front for me. Instead of making me scroll up a day and a half's worth of conversation to get the lessons. And that's just, I don't know, maybe it's me being lazy. I don't mean to be. Just easier. Scrolling. Almost there, guys. I'll be there in a second. Victor, Pete, Victor. Cav. Almost there. I'm getting back to you guys. I'm almost there. Miss Adriana. Cav again. Pete. Cav. Pete. Cav. And Adam P. If you're getting an error, Adam, that it's liquidation only, are you on a prop firm somewhere? Usually that is the sign that you blew out your account. That I'm not sure. I would get with Jason. Adam, you're a gold trader now? I'm not sure. You could get with Jason on that. You could get with Ninja Trader on that. Typically, anytime I see liquidation, it means that an account was blown out. But I'm not sure. Sorry, that wasn't as helpful as you needed it to be. All right, Paul gets us going. 15-minute down, in transition. Because the small triggers rolled, pull back to an area, close below, and directly into a midband. Just have to be aware of it. Profits. Nice trade, Paul. It's just a trend trade. Just a trend trade. Wayne is not here. 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 I don't have any idea what that is. Or that. Oh, that's him showing Paul stuff. We don't need that. Wayne is not here. Wayne is not here. Page is not found. Page is not found. Wayne is not here. Wayne is not here. Here we go. All right. You betcha, Paul. 15 minutes up. In transition. Clear path. Price pulls back to the area. You close above into the one-to-ones. Do you see it, Paul? It's important that you recognize that you traded directly into one-to-ones, because look what the one-to-ones did here, Paul. Boom. Big honking ugly push down. Could have done the same thing. Management hat is on. Market comes up, comes all the way back down, all the way back up, and you make $115 and stopped out for a loss of 20. It makes sense. That's a hell of a hold, though. That really is a hell of a hold. And one of the things that we're going to talk about on Victor's as well, and I think you did the same thing, guys, or Paul. So let's talk about entry logic for just a second. And let me find a picture. And I'm just going to use this one as an example. And guys, I'm not saying that there was a trade met. But I want you to see something. Why do we take a trend trade? We take a trend trade because there is an established trend, because the path is clear, because life is good, and at some point during that trend, there was a fight. The fight needs to go back to an area. When it's lost and the rules are met, the market continues. So initial stops on a trend trade are put below that fight, where the fight has been lost. So that's your spot. And I want you to see, there's another fight if you were going to hold for a bigger move. And as it continues back up, that's an awesome spot behind the most recent failure for a stop movement. Does that make sense, everybody? So you guys that want to hold for these bigger moves and just hold on to a trade for dear life for its entirety, these failures are a great place for stop placement. Nexgen's been teaching this for decades. So on that same token, initial stop, perfect. The market comes up, the sellers try and fail. That would be a reasonable stop, Paul. If your trading plan says, I don't want to hold for 17 days on a trade. I know where the target is. I know what it's supposed to do. And if it doesn't do it, I want to use those failures. And it does create a small loss. And then if you take the re-entry, there's your new stop. And that's the one that gets absolutely run over. But because you're in the transition, and ultimately on the weak side, you can begin to gauge. And those one-to-ones hold beautifully from the weak side of the trigger. So Paul, do you remember when we say when it's weak? And it was by the time you got there. When it's weak, getting paid at the area, no reason to give it back. So we kind of go full circle. A lot of good lessons on this one. Great entry, great trade, great first profits, and some good lessons in there. And that's all I want to do. I just want to find some good lessons. All right. Triggers down, transition, clear path. So the challenge on this one, Paul, is this never was anything other than support. And let me know if this makes sense. The market comes down to that area, and it never breaks it. You never get a full body below, and that bounce is literally support creating a bounce. So a close below the triggers isn't really a trend trade. What it is it's hoping, and you still never got a full body. It's hoping that because of these advantages, it goes to the next area. So it breaks entry rules a little bit because it didn't pull back to an area. It kind of stuttered off a support, and then you took the breakout on the way down with all your indicators pointing down. I'm not saying that it's not a great look. I'm just saying that that is a huge stop at 14 to jump in all the way down at 02. That's $240 per contract. And what you're really saying is, man, I hope they don't go back up. So maybe on something like this, if you're just going to jump in and you're going to put all your eggs in one basket on this area, stopping the market if it retraces, tighter stops make sense up there. Good stuff, man. Good stuff. That would be what we call the prairie dog, Paul. Cool. Weak bottom, odds favorable, and no room. And I love this. And guys, this is the difference between the people that continually struggle and the people that move forward. Pete took a second to say, this is a trade I shouldn't have taken that worked out, which is code for I got lucky. Momentum entry directly into a termination condition. I had odds favorable momentum and 3 triggers through this area, but that termination should have kept me out. There was no room for him to make money. And then it pulls back and he goes, well, you know what? With this level of momentum, with these strong triggers, I'll take a chance. And it's pretty cool. He goes up and he makes a little money on the one from the lower entry. And we'll just say he loses a little money on the one that he shouldn't have taken. Overall, he's up money. And the difference between taking this entry and sitting through all this, could you imagine if that termination condition won and it came all the way down here? That's a colossal loss. That's a 6 or 7 point loss. And one of the great things about the methodology is we're just better than that. And we don't have to sit through those losses. So when you take this trade, that reversal bar says, whoa, something's not going right. Is it better to lose 2 ticks here? Then that's a choice that you guys have to make. And Pete, I love the self-analysis on that. I said that and I stick to it. Love the self-analysis. I know, and I think that it's cool because we all take trades that are wrong every now and then. So Pete, my biggest thing, you know, when I talk about the thing, that thing that screws you up, my thing, Pete, is a reversal bar that finishes into an area, and I don't know why, and I'm learning to beat it right now because it's a new look for me. You've got to identify it, and you've got to self-analyze, and when you do that, you're less apt to take the trade. And it kept me out of one this morning, and it saved me a lot of money, so good stuff. So the trend is up. He's on the strong side of triggers. I'm going to go through your annotations or your acronyms, Wayne, for the kids in the front row. And then there's room to targets. Because the small triggers roll, I wait for price to pull back to an area. When it closes above the small triggers, 15 ticks room to target, I don't know, that's pretty good. That's 150 per contract. And there it is. And from the strong side of triggers, Wayne, that 15 ticks when you get there doesn't have to be an exit. That 15 ticks can be a get paid, go break even from the strong side. So let me read it. HVA never broke. This bar closed above. Stop was too far away, 40 ticks. Then this bar opened above the HVA, previous bar for white bar entry, not much room to target. This is one that I don't know if it fits any rules, but it was hard to watch it just go in the direction that the white bar said it would go, and I wasn't in the trade. So Wayne, I know you're in here. So let's do this real quick. The first thing that I would say on this trade, strong side of triggers, best look ever, 1 minute areas, most likely to break. So you have to ask yourself, I know, but do you not want to talk through it? There might be some good stuff in here. Cool. So from this entry right here, you have 15 ticks, right? So the question is 15 enough for me to react, get paid, get to break even, since I'm on the strong side of triggers? And I think that would be the question that I bring into it. is there's still enough room on the perfect look for me to take 150 bucks. Okay. So you don't like the risk to reward. And then there's your down bar. There's your up bar. So if you took this entry, it's a quick snippet, Wayne. That's your failure. That's your continuation. That's your pivot for the new stop. So if you took the second one, which probably only had 10 ticks, it's way lower risk because of that down up pattern. And there's nothing wrong with not taking the trade. Does that make sense? See, it's a good thing we talked through it, right? That pattern is more powerful with odds favorable momentum. But when you're taking that little late, small triggers up, failure, continuation, stop placement. Perfect. Same way you could do it here if you were actually in a trade. Failure, continuation, stop placement. It's an awesome way to tighten up. Good stuff, man. Trend is up, strong side, room to targets. Because the small triggers roll, wait for a pullback to the mid band. Enter with a close above. Get out of trouble. I mean, my gosh, that's perfect. Everything about it, Wayne. And it sucks when they give you that huge bar, but sometimes they do. Nicely done. But you still had room to trouble from the strong side of triggers, so it made sense for you. And again, if it's just overwhelming, I don't want that much risk, right? That HVA line, the ones that you're watching, Wayne, to get the close above to feel good about that trade, sometimes you can just drop it 4 or 5 ticks below, because if they get below the breakout, the HVA, from that much risk, it might be worth it to take a little hickey, because if they do go down, they're more likely to go all the way down to the midband. Like it. Trend is up, strong side of triggers, room to targets. What zone did you break? Was there a zone there? Oh, you're on playback. So there was a zone, full bar, pulls back to the zone. That's your initial stop off of a momentum style trade. And it never even makes it back. There you go, trading the pivot. Love it. Money, protection, beautiful. Blue lines are zones. I read that. So when you're doing replay, you draw them in. That's smart. I liked that. And appreciate that you shared that in the room too. Trend is up, strong side, pull back to the area, close above, rinse and repeat. Holy crap, Wayne, you're boring me to tears. Great trade. Just a perfect trend trade. First it's up, room to targets. Because the small triggers roll, pull back to the area, close above, let's make money. I mean, beautiful. Beautiful. Rinse and repeat, my friends. And then sometimes we just jump the fudge in. Just kidding. Strong triggers up. Room to trouble, 44.3. What did it break above here? Oh, you had 1-to-1s? Okay, so it breaks above the 1-to-1s, pulls back to the 1-to-1s. That's a momentum trade, and you take it up to trouble. Rockstar, Wayne. That's, guys, remember when I said that you'll use the large triggers to define momentum for what we call a momentum trade? That was perfect execution. Nicely done, Wayne. You really have found your groove lately. Your trading feels calm, if that's a thing. Yeah, momentum off the 1-to-1. I saw that. Triggers up. Notice that he doesn't annotate the chart when he trades directly into shit. That's normal, Wayne. That's like looking down at your shifter foot when you miss a shift mid-corner. 0 annotations. Let's go long directly into trouble. Quick exits. It's just momentum. Jump the fudge in and hope for the best, and it worked out. And this is my favorite part. There's the results. Oh, okay, right on. I knew that there was one in there. That was it. Right on. Trend trade, make money. Trend trade second contract. Gives 20 back. That's half. Trend trade, sudden reversal, stayed in full stop. Uh-oh. Did we see that one? I don't remember seeing that loser. There might have been some information there. Trend trade going, bad exit. Trend trade, first contract, second contract. Trend trade, trend trade. Trend trade, trend trade, trend trade. Did not split trade. Trend trade, first and second contracts. So maybe this one right here that didn't get posted. Remember when I told you guys, I've never met a 100% winner, but you'll think they are from what they post in the room. No offense, Wayne. Never saw that one. There might have been some good feedback available on that one. A lot of ways to make big losers smaller losers. That wasn't yours? Was that Trina? Did Trina take a full stop on your account? Oh, Trina. That's Paul's summary? Okay. So Paul, maybe for you there's some language there. Why are you taking Paul's summary and posting it? That was Paul's summary? I'm so confused. I must have missed one in there thinking it was yours. Sorry. All right, trend is up. Strong side. Pull back to the area. Close above. Stops make sense. Fail, push. Stop makes sense. Make money. Make money. Rockstar, Wayne. Rockstar. I didn't realize that was Paul's post. Sorry, I was trying to hold on to all of yours as we went through, and there's the same trade. I must have hit it twice. I was trying to keep all of yours lumped together. I probably accidentally put one of Paul's right in the middle of it. Trend is up. Is it really the strong side of the triggers, Wayne? I don't see your entry over here, but over here it looks like you went short against the trend, not from an area, coming off upper HVA. Not really. But that is your pattern. And I can't tell if you made or lost. And then you say it's your trend trade entry, but it never pulled back to the area. Never pulled back to the area, Wayne. That was your trend trade entry right there. That was your entry. This is you full of shenanigans in the middle of a trend trade. Does that make sense? Never pulled back to an area. Okay. The HVA wasn't there until this bar finished. So, white bar pattern. But the white bar, and Wayne, do your thing, man, right? Do your thing. The white bar pattern, the whole premise of that is coming from an area. Is coming from an area. The white bar pattern is really, the methodology is dependent on using an area, not just in the middle of nowhere. Trend trade, good. Counter with entry, lose a little. Mistake on white bar, didn't have the area. Trend trade, beautiful. Nicely done, Wayne. All right, momentum is up. 3 triggers through. Momentum entry with momentum. Should have brought first target underneath the 1-to-1s. I agree. Lines create bounces, guys. So this is another one of those instances. A lot of happy feet on Monday morning. So this entry is a loss. This entry creates a winner, right? Or this entry is a tiny little winner, and this entry is a tiny little winner. Whichever way you want to look at it. If you're gonna take a jump the fudge in, make sure you have room to make some money. Good stuff, Pete. And then Cav, jump the fudge in, right? Not a clear path yet. And then it pulls back, and then off it goes. Nicely done, Cav. And then when it reaches the termination, pivot stop out, right at a fib, Cav goes, I recognize that pattern. Mark, this isn't a trend trade. This is counter trend trade. So I'm going to make quick profits from this pattern that I recognize through study, class feedback, participation. and it suits my needs based on analysis. Nice job, Kev. All right, trend trade. Triggers are up, in transition, room to targets. There's your pullback to support. There's your close above. Hit an HVA, hit an HVA, hit an HVA, hit an HVA. There's got to be a point where you believe that HVA is doing something. Monday morning early, but the lesson on this one, and I posted it in the room, and guys, and this is another one, and I'll tell you what, I'll just do this. Stop placement. Failure entry, perfect. This one, if you were following the basic rules for stop placement, was a loss. But then it gave another entry, and then it gave a failure and a continuation. There's a new stop, and a failure and a continuation, and there's a new stop. And what happens is you can take much smaller losers by listening to the market, by watching the sellers fail, by watching the buyers take over. And one of the things about this one that I noticed, so Victor, you're in transition, right? When you're getting in, it's not the best look. But it actually looks like it goes to strong. You hit, smalls get above the large. You hit, smalls are above the large. You hit, smalls are still above the large. It makes sense. The hold makes sense, Victor. The triggers were giving you everything that you needed to feel like that market was more likely to push up than come down. I don't disagree at all. Even this is a momentum entry, and even that is almost a momentum entry, and it just doesn't work. And maybe on these bigger holds, using pivots just cuts losses a little bit. Because remember, you can always get back in if things aren't going your way. 15 minutes up, in transition, clear path, pull back to support, close above the small triggers. And then, Paul, are you in on the lesson? There's your pullback and failure. There's a new stop placement. There's your pullback and failure. There's your new stop placement. Just a great way to minimize these losses a little bit when the move isn't really going, because you're literally watching the fight. I love that. So Victor and Paul, gold stars and high fives to you guys, because I really think you brought a lesson to light that all of us need to remember every now and then. Why do we put stops where we put them? Because it's the failure. And if they start taking out their failure point, they've probably got a little bit of angst behind them. Trend down, strong side, room to trouble. Broke zone. Something may have changed there. Pulls back to the area. I don't know where the entry is. Still inside of the triggers, maybe? Out at trouble. I'm going to say good trade, I guess. All the resistance. And you said, I'll take that little early entry because I got a wall behind me. Weighing out advantages and making good decisions based on them. I love it. And that's it. That was your trend trade long, Paul. Perfect read. When that one failed, all they wanted was that lower area, right? And then they did everything they said they would. And what's hard is when you take that loser, if you're not fully committed to your plan and trust it, that's a hard trade to take, isn't it? Oh, I just lost on what I thought was the perfect trend trade. I don't want to take the trend trade again. You'll get to a point with enough repetition to where you don't even consider skipping the perfect trade. You'd rather lose the perfect trade than miss the perfect trade. Triggers are up. Entry upon zone, entry, re-entry, transition, room. Oh my gosh. Jen, I think we just got married because I don't have any idea what you just said. Let's see. Pull back to the area. There's the close above. Pulls back to the area, can't make it. Pulls back to the area, can't make it. And then it crashes down. Why so much risk? You were happy with the risk. Okay. Also 15-minute white bar printed and next bar opened above. Okay. So we're right here. Cool. And you just hold that trade. Jen. Egads and little fishes. That's a hell of a hold. From 41, you were down there at 37, 4 points, 200 per contract. Just comfortable with it. I don't say don't watch both, Jen. I've never said don't watch both. I said if you're not capable of watching both, don't. If you let one talk you into crazy stuff and ignoring the others, don't. I can't really watch both. I'll use these trigger directions, but I'm taking my trades on NinjaTrader. But I mean, so I guess you have to ask yourself, and Jen, only you can answer this question. First stop placement could have been a stop out, small loss, wait for the next trade, right? Next stop placement, another loss trade. That's big, right? And I don't know, maybe it didn't set up the next one. So I guess when you win, it feels good. The stop makes sense. 740. So at 740, Jen had some good stuff going on. So I want you to see, because Jen's gifted and talented. At 740, Jen had everything up, miles above Fibonacci support. And at 740, you pulled back to areas, I don't know, wrong side of triggers. I don't know where your entry would have been. It's hard to line the two up. But I believe you. And this is just me, Jen, and I'm not trying to project or tell you what's good or bad or what you should or shouldn't be doing. I have this, and it's a very egotistical view based on my time with the software. I feel like I have such accurate entries that anytime I deviate my stop placement plan, it's because I'm putting hope on a trade. Because I'm leaning on, oh man, I sure as hell hope this holds down here despite the odds favorable minimum. I hope it holds down here despite it being in that trouble spot and already working its way down. That's me personally. That's me personally. And you had a higher time frame fib that you were hiding behind. And that's good. I don't have the clackers to do it. So I'm impressed when you guys have these higher time frame reasons to hold your trades. It's good stuff. All right, trend is up. No, you're welcome. And guys, I don't have to have the same courage you do. It doesn't mean your trade is wrong. I just point out the little things that I see from stop placement. And I like smaller losses. I think that there's too many opportunities. Thanks, Wayne. All right, triggers up. On the weak side of triggers, room to targets. And then, guys, this is that prairie dog again. So let's go through a quick lesson on what changes an area from support to resistance if we could. And I'll drop this PowerPoint in the room too, because it also is, it's good stuff. So, whoops, let's just do it like this. And guys, this changed everything for me on TradingView. This lesson right here, 100% put me in such a different mindset on trading. So if I'm coming into resistance, so here the market is trending up, it's coming up, and it hits an area of resistance. that area remains resistance until I get a bar that finishes 100% where the whole body is above. And then once that happens, this area becomes support. And you can see it behaves as support, behaves as support, behaves as support. And then it breaks away and it pulls back and it is still support the whole time. And then once I get a full bar that closes below, that's when it becomes resistance again. Is everybody good with that? So what happens is you get these little peaks below support. We call it the prairie dog. If you've ever seen prairie dogs, they kind of pop up, look for trouble, and then go back. And that's what happens on these very often, is the prairie dog is you saying, oh, look, the bar closed below the triggers, below the area. Certainly it's going to go down. But the reality is this is still support, and very often it behaves as support. And this is still resistance, and very often it still behaves as resistance. So that one little lesson, guys, forcing the full bar to get above before you try the entry, it helps a little bit. And then Victor, one of the things about this one, and I put the picture and you said that all the zones changed, but if you have odds favorable momentum up, you're not in at the pullback to the area with a close above. There's no way. You've had 3, 4, 5 bars at that point. And this, even without the zones, is jumping the fudge in, hoping it goes to the next area. Does that make sense? If your chart looks like this, you're not buying the pullback at an area. And I think I even went through. So that was it. So there was your entry right there. And that was beautiful, wasn't it? Pull back to the area, close above. I don't know where the zones were, but that's freaking rock star entry. Absolutely beautiful. And then there was the second pullback with a close above. And then later, I think it turned into something else as well. So good lesson, guys. If it's too far gone, just let it be gone. There's more. There's more coming. And then 82 stop all the way down here below that pivot. At this point, I don't know. I mean, it makes sense based on that pivot. I just don't think that well, it became support again. Maybe just a big hold there. Good lessons, though. Good lessons. Let's see. Trend is up in transition, pulls back to the area, behaving as support. There's your close above. And it's just easy money, smooth sailing. Nothing in the way. Nice job, Victor. That's a good one. I think somebody in the room took the exact same one. And man, that's perfect. And then when you get the little blap bloop, there's your new stop, and it's virtually nothing. Right off the HVA. Nice job on that one. Really good. And guys, this is what we do. We just go through charts and say, hey, did I miss something? Let's talk about something. Let's see if there was a way to do it better. Strong top, odds favorable, 3 triggers through. Large chart says, hey, guess what, Pete? We are so more likely to go down than up. Pete says, well, I like what you're saying. And Pete, 3 triggers through on the small chart is not the same rule as on the large chart. Your large chart is bigger, it's slower, it's going to show trigger penetration before it does here. What you took here is a momentum look without momentum, and it does go down. I love it. And you're off with a balanced stop. So took a shot. Counting triggers on the small chart isn't quite as effective. Did you? I had 3 triggers. Oh, you had 3 on the large chart. Man, reading comprehension, Pete. It got away from me today. I read 3 triggers and then brain froze. I apologize for that. Can I play my human card on that one? You waited for the 3 to get through, so it was a better shot, and then you knock it out. which is brilliant and not at all what I said. Good job, Pete. And guys, I'm going to do that sometimes. I'm going to make a mistake on the read sometimes. Correct me. Victor, you said that the large triggers were up at the time. So they're in that transition stage, right? And that's okay. Market pulls back. And there's just, you said you had $80 to the mid-band. You said 160, but it's a 2 lot. So you had 4 points. You had $80 from the time of entry to get to the mid-band. And I'm not sure that that's true because there's your 89.98. And that looks like it's at about 91. And that's tight. And from the weak side of triggers, areas are more likely to hold. And it did. And it held 1, 2, 3 times already. And that was the challenge. What am I doing wrong? Trading directly into areas that could stop the market. Does that make sense, Victor? From the weak side, that mid-band has a way better chance of ruining your day. Good stuff, man. I think sometimes we wake up early on a Monday and we're so excited to trade. And I'm guilty of this. I'm so ready. I had to sit through the whole weekend. I couldn't look at charts. And I find myself really searching for trades, searching for money. And I back off from looking for rules to be met a little bit. And that's one of the reasons in my own personal trading plan, Monday morning is a 2 cup of coffee wait. Because I will want to jump on the first trade I think I see. And my analysis is lacking a little bit on a Monday morning because I'm so excited to get in and make money. Clear path once the triggers get above. Cav says, look at this. So I'm going to jump in with momentum, but I'm going to jump out because it's just momentum. And then I'm going to jump back in, and I'm going to make that money on the second bounce. You did 2 momentum trades without momentum. And Wayne, I think it's just normal on a Monday morning because we're excited, right? I get excited about trading. I get excited about reading my indicators. I get excited about all this stuff. And when I wake up Monday morning, I've already decided I'm going to make a shit ton of money. Let's go get it. And I get a little ahead of myself sometimes. Entry at pullback, but triggers together. Who was this? Help me out. Who took this trade? Oh, don't make me scroll all the way up and find out. Who wants to claim this one? I love this trade. So check it out. And the trade isn't this box here. The trade is actually before. So I'm going to show you guys something cool. Nobody wants to claim this one because it's awesome. Are you nervous? Are you afraid I'm going to beat you up? I will too. Forecast calls for pain. Not really. So if the perfect trade, that's Adriana. Did she leave already? I love that she showed up. Thanks, Sergio. So if the perfect trade is momentum, path, and entry, this particular chart is missing momentum. And her trade was right here. And I know that it was right here because I took the same trade. It's lacking a little bit of momentum, but it has a clear path, has a super low risk entry, and it has room to get to the target. Entry at the mid-band, out at area, manage. It's beautiful. And it was actually 4 triggers through at the entry, Wayne. It's hard to see. But all 4 triggers had already cleared Fibonacci support. The path was nothing but clear. It was the tail end of momentum. It was the perfect entry. I mean, this is rock star. So Sergio, you tell Adriana I said great job. 50-50 trade, pulls back to the area, out at trouble, and when something goes wrong, manage assertively. Give her a big hug. Be a good cousin. It's cousin, right? Be a good cousin. Great job. That's awesome. Adriana, if you're listening on the replay, good job on those. She's your aunt? All right. Is she the cool aunt? You know how everybody has the one cool aunt? Yeah, she seems like she would be. Everything is up in a strong trending market. And then placed a limit order inside the triggers, price moving strong. And when you're on sim, you over leverage and break rules. And Cav, it's just riding that wave. Nice job. Nice job. Riding the wave. With momentum and path. Jump in, get paid. Nicely done, Cav. There it is again. Momentum and nothing in the way. Jump in, get paid, get out if things go sideways. Same trade, different market. Momentum and path, guys. Once you learn it, life gets easy. And when you know you can't go long anymore, placed a limit order inside the large trigger. And Cav, that's your own rule, but it seems to work for you. This trade that you took, Cav, do you know what's coming? Do you know what direction I'm headed on this? So this trade that you took right here, oops, boom, 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 is the exact same trade that Nexgen was teaching people in 2004, 2005. And it says, when you reach a key area, when the small triggers roll, sell a pullback to the small triggers. When you reach a key area, when the small triggers roll, see it right there? Sell a pullback to the small triggers. Cav, this is a trade that's been around for 22 years. And your execution is beautiful. And because it's a little counter, quick profits makes all the sense in the world. Nicely done. And I'm not sure what you held forever there. Might have been a little excessive on the hold there. There it is again. Everything trending, super strong, nothing in the way. Jump the fudge in, get paid. How many times do I say that today, a day? Momentum and path, jump the fudge in, make money. Guys, that's not a next-gen trade. That's a trade you guys created. 50-50 trade. Getting in, getting up. Weak bottom, 2 triggers through, multiple divergences. Cav, I can find more wrong with this trade than's good, but when you've already made your money and you're playing on simulator, you'll take some chances to see if momentum does its thing. Which, if you are solid with your plan, guys, like if you know what your plan is and you know that you can follow your plan in the real world, that's not quite as detrimental. But when you start getting crazy where you're like, man, it's weak triggers directly into a termination, divergence from a 1-to-1, F it, I'm going to go long anyway. These are the lucky trades. These are the lucky trades that kick your ass when you go live. I'm just going to say it. And Cav, you didn't place a limit order inside the triggers. You caught it as price was coming up off of the large triggers. I can read your charts too, guys. Good stuff. That's our first round of pictures. Look at you guys go. Oh, no way. Hold on. Everything up. Room to targets. Pull back to an area. Close above. Son of a gun. And it did go up. Oh, and look, and there it is again. And it went up again. I'm not done yet, Wayne. I had 75 to go through. And then there have been some that have been posted since. I am not excluding Trina, I promise. I promise. All right, we got Adam P. Oh, I didn't have an answer for that one, sorry. All right, Pablo, let's see what you did. Triggers are up, strong side, some room to trouble, pull back to an area, close above, out at trouble. How easy is that? No, you're good, Wayne. You can do no wrong. Pablo, It's perfect. Was it easy? I got you guys. If I haven't seen your chart yet, there's a good chance that you posted after the 75 before, and I have to go through and catch up. When you're patient, it's easy. Amen. Great trade, Pablo. Beautiful trade. Cav jumping in. Strong trending market. Works out making money. Paul W. Triggers are up. Pulls back to the area. Close above. So Paul, failure, pivot. Did you use it? You did. Nice job. When it pivots off that HVA, that's your new stop placement. Great job, great management. Sometimes you take a hickey. Sometimes there are hickeys to be taken. Strong triggers and nothing in the way, jump the fudge in and get paid. And then if the momentum gives even the illusion of slowing down, get out of there. There's more trades. Pete, beautiful. Miss Jen, transition, room. Prairie Dog right into the outer band at resistance. I'm assuming maybe the zone wasn't there. I don't know. Pull back to nowhere. Have no idea why that entry's there. You get out at a divergence high, and they give you tons of money in a market that's just running away. Thank goodness it ran away, huh? Thank goodness it ran away. Jen, do you want me to say that you broke a lot of rules there for a trend trade? Or is that a plan? Man, Victor, I promise I haven't skipped anything intentionally. There is a good chance that I just haven't gotten to it yet. Yeah, you pulled one off. Pulled one over on them. All right. Yellow boxes. I don't know what they mean. No worries. So when I started, Victor, I clicked through about 50 pictures. And then people started posting more as I was clicking, and I didn't get any of those. Aaron, was this you? What do you want me to know about it? I'll tell you what I see. Bad top. Retraces to support. Triggers roll. Pulls back. Everything says down, and you went long, right? No momentum against the trend. I don't know what kind of trade this is. I guess you can't go short, go long. But every indicator is pointed down except small triggers. So, oh, the big yellow boxes aren't where you're trading? Cool. Give me something with some annotation. Let me know what you did. I'd love to give you some feedback. I bet there's an awesome jump the fudge in trade in there. Pablo, triggers up, transition, room to trouble, pull back to an area, close above, get paid again. No? All right, I'm not going to play the guessing game. Help me out. Pablo, 2 for 2. What's the one challenge on this trade, Pablo? Pink 1-to-1s, right? Could have screwed up your good time. I just want to make sure you see them. Did they stop printing? They may have stopped printing. It's kind of hard to tell after. They were gone. Right on. Perfect entry. And I like it. Right at the outer band. Right at a divergence high from the transition side. And 58 to 76. So 2 for 2, man. Eventually, you guys get to the point where you're like, dude, it's so worth the wait, isn't it? It really is. It is so worth the wait. It's not always fun to wait, but you guys seem to make a lot more money when you don't just jump in all willy-nilly. Here's the same trend trade everybody took. Up it goes. And Trina missed the entry, and then it pulls back, and she's just in late. And you had to sit through the nonsense. Whew! And there it goes to 74. Nice trade, Trina. Sometimes we get late entries. You're on the good side of the small triggers. Everything is up. Expectations are set. Nicely done, Miss Trina. It's a late entry. I like that you know it's a late entry. The cool thing is once that went up, you could reduce risk behind it. Good job. Look at yous guys doing all this good stuff. Weak top, pull back to the midband, triggers a full bar away. You jump in and close the gap. No divergence, no areas, nothing. Just fight everything, Jen. Love it. Glad it closed the gap. Whew. Jen, did you get your sound back? Can you hear me? I guess so. You're typing. I don't know. This one looks familiar. All you guys taking the same trade. Oh. Up, transition, pull back to the area. There's your close above. Great entry. Make some money. Nicely done. That was nice. Fast market. Slipped you to the positive, Victor. It's always awesome when that happens. Guys, this is the perfect trade, and like all of you took it. That always makes me proud when I see people in the room all doing the same thing, following the basic rules, and all of you making money. That's pretty awesome. All right, I was waiting for the pullback to an area inside of triggers. Not sure what I did wrong. So, all right. You ready, Aaron? Let's do two things here. The first thing to do is celebrate that your large chart was 32 flavors of kick-ass. You had all the momentum, and there was nothing in the way, right? You good with that? So, Aaron, here's your tiny fix to make it all better. Use a limit order to buy or sell a pullback at an area inside of triggers. This is what I want you to remember, and I want you to see how effective this is. Are you ready? I hope you're ready, because here it comes. Brace yourself. Aaron, here are your triggers. Whoops. Here are your triggers. Here is your area. Do you recognize that if you use the phrase buy a pullback at an area inside of triggers and thought that was what you did at your entry is where you placed your limit order? Yeah, but if the area isn't inside of triggers, I can't just place a limit order not in an area saying, well, there's one lower. It should bounce, right? We rely on the areas to create the bounce. And if the area is not inside of the triggers, this area has nothing to do with a trend trade anymore. It's on the wrong side. It's where your stop goes. Does that make sense? So if your areas are on the wrong side of the triggers, it's just better to pump the brakes. Because once it gets below them, even if the large chart is perfect, and man, props to you, the large chart was perfect. That little bit of verbiage from rule number 3 keeps you out of this loser. Does that make sense? Awesome. And I like these pictures, guys. I really do, because very often when you're newer with the software, it's that level of subtlety between winners and losers. And it's learning that little bit of language for entry. And you just start saying, well, that's not inside of an area. That's where the market shouldn't go. I'm not going to place a limit order. And then that avoidable loss never hits the account. Because how do you pick a stop if you're already where the market shouldn't go? It all comes full circle. Good picture. Man, large chart was perfect, Aaron. It has to be. Okay. So Aaron, let's do something real quick. You ready? Here we go. That's it. That's it. In a market that exchanges $174 million daily, you have to be willing to say, it's not my money. And what you're describing is the fear of being left out. We're going to call this FOLO. I'm trying to coin this phrase for all the cool kids. When you watch the market go without you because your rules weren't met, you start saying, well, F these rules. I'm just going to jump in anyway. I'm just going to take money anyway. I'm just going to do this. I'm just going to do that. And then you start taking these losses. And you can't figure out why the hell you're struggling. And it's because you're deviating from the thing that you know brings success. There is so much movement in the market, guys. It's not all yours. And maybe it could be one day, right? Aaron, if you just jumped in here and jumped out here for $100, that makes sense with momentum and path. But there's a reason that the words I use in this room are so specific. Because when you learn them, life gets really easy. It really does. And there's so many opportunities that you think are opportunities that are just like two whiskers short of goodness. Guys, this area is resistance because this bar broke below. So even though you have triggers up, even though you have room to trouble, you are trading directly into resistance. And if this peeks its head up above those small triggers, that's a prairie dog. That's not a real trade. That's a trade that you fabricated. Does that make sense? It doesn't fit rules. It's the two whiskers that separate. You finally got it, Pablo? It takes all the stress out of trading. Because you're like, well, that's still resistance. That's not my entry. And it still hasn't gone up. But what you can say, guys, is because this is resistance, because the large chart rules are met, I know exactly where my trend trade has to come from. Right there, guys. That's your next spot. Does that make sense? So you don't even stress out up high. You're like, that doesn't fit my rules. But this would. If I get a pull back to this area, if I get a close above the small triggers there, holy crap, that's perfect. And now you just sit still and you eat a Pop-Tart and you're like, man, I sure hope the market comes back to that spot because that's where my rules are met. Everything is up, room to trouble, pull back to the area, close above. Every one of you took the exact same trade. And Paul, you lost, it says you lost 150, in at 59, out at 64. Oh, you exit when price closes below the trigs? Okay. Still looks like you should have made money on that one, not lost. And then price pulls back. Sometimes they just don't run. Sometimes they just don't run. You think Guinness was giving you trading advice this week? Zero chance of missing out. I like it. But Phil, you're absolutely right. It's that little thing, right? It's that little bit. Let's see what the prairie dog does. It could go up, and some of you are going to question everything. I just don't have a trade here. Not one that fits the rules. If this bar finishes above and the full body is there, then we get support. Then I need a little snapback. All right, guys, we made it through 2 hours. Made it through 2 hours. Good job, everybody. I'm going to walk away for a second. If I missed one of your posts, guys, I apologize sincerely. Do me a favor, repost it. If you have questions about something specific, do me a favor, post your question. I'll be back in about 5 minutes and we'll finish strong for the rest of the day. All right, y'all. Here we go, last hour. The S&P says that the colors don't match, so I don't have momentum up. So I'm really just not even looking for a trade there. Crude oil says 2 triggers through. 1 divergence, 2 divergences, and it's just struggling. We'll see what it does. Crude oil has been range bound pretty much for the entirety of this class. Very difficult to trade when it's like that. Triggers are up. There was your break above. There's your pull back to the area that is now behaving as support. Do you guys see it? So what do we need? I need a close above triggers to fit the rules. And then, Paul, I want to address what you said. So Paul posted in the room, one thing I've learned today is Mondays wait for the best trades, even if they never arrive. And I think that's interesting. Every day. And that's kind of my point. If you know what the best trades are, the question that you have to ask yourself, and more importantly, you have to answer truthfully. Here we go. I'm going to do it all big. If the best trades give me enough money to meet goals, do I need anything else? And guys, I don't know what your goals are. I trade trend trades. That's it. I typically do it on Ninja Trader. Oh, look at that. Never got to close above. And I can tell you with zero hesitation that the best trades are enough. The best trades are enough to get to where you want to be. Trina, did we already see this? Nope. Pull back, close above, jump the fudge in, days away, and make money. Awesome. Good job. Is that a prairie dog close above, Trina? Or is that a close? That's inside. So that's not even a prairie dog close above. That's support. That's just an up bar inside of triggers, right? And then that is a prairie dog above the 1-to-1s. So you just jump the fudge in. Okay. And you made money. Good job. Trading with the large chart. Trading with the large chart. What a crazy concept. I love it. Triggers down, 2 triggers through. Riding the momentum down to trouble and get out. When it pulls back on the 50-50, you get in with a little confirmation. Woo, almost got you. Make a little money. Taking advantage of momentum, Pete. Nice educated jump the fudge in. Wayne's playing the role of your lawyer today, I've noticed. He's looking out for you heavy, Trina. He must be sweet on you. Was that picture a trend trade? Papa, this one? Jump the fudge in. There's your pullback. There's your close above, but the 1-to-1s were problematic. So what she did is she said, okay, everything says up. I've still got room to the next area. All my triggers are pointing the same direction. I know this was the trend trade, but where do I expect it to go? At least to trouble. I'm going to jump the fudge in and see if we can't get to trouble. Does that make sense? Not a true trend trade, but it's a great read based on large chart advantages, nothing in the way, waiting for the failure, waiting for the bounce, and then just saying, hell, everything's up. Let's go up with it. It's, as Wen said, it's a nice educated jump the fudge in. When you guys start looking at the big picture, you start to see more like this. So Trina, high five. All right, Aaron, let's see what you did, brother. Large chart momentum. All right, I'll give you that in the moment. Large chart momentum. Pull back to the area inside of triggers. Market comes up. You get paid. Out break even. I love everything about it, Aaron. I love everything about it. It makes sense. In the moment you had momentum, your path was clear, you had the perfect pullback, you take quick profits, really quick profits, and and then you protect your investment. It's a little scared management, but the second lower divergence was an exit condition anyway, so I'm glad that you pulled something out of nothing there. Paul, I'm not what you're saying. So you've made enough for your trading account to not use Pro Trader. Congratulations. I'm not sure what you're saying there. I feel like it's a dig. All right, now we got those triggers that are kind of saying down, but they're not officially down. Blew through the mid-band like it didn't even exist. We'll see what happens here. We'll see what happens here. See if those one-to-ones stop the move down. And then what's the only challenge there at 69.75 with a close above the small triggers? From the weak side, pointing down, that one-to-one could be problematic, right? Oh, I'm sorry. I meant NinjaTrader to trade, Paul. I mean, I use Nexgen indicators for sure. I'm not allowed to use Nexgen Pro Trader funding. It's kind of like employees of the company can't win the sweepstakes. Yep. The one-to-ones are still support. With a close above, the mid-band is the challenge right here. Yeah, I use NinjaTrader. I can trade on either. Well, the one-to-ones are still support, right, Victor? Never get a full bar below. The challenge is with this big honking bar, you don't have a lot of room, but let's do it just for grins. 3, 2, 1, boom. There's your close above. From the weak side of triggers, there's my first sign of trouble. Does anybody feel good about $4,600 worth of risk from the weak side of the triggers? It fits the plan, right? So this is where you could say, all right, I'll go below that HVA and we'll see if it works. So close. It hit it, but it didn't fill. There we go. That's a quick $1,000. Fits the rules, doesn't it? Fits the rules. It didn't fit the rules, Trina? Then you don't have to. I'll do it on simulator all day long. Prairie dog on which area? The mid-band? You know what? It's a gray area. The mid-band is a moving average, not a solid area. I keep it on my radar, Trina. I want to be above it, right? Kind of like triggers are a moving average. I want to be above those triggers. I want to be... So you're right. You are right. I will give you that 100%. But I think about... Because if you watch the mid-band, it squiggles throughout the whole day. And it's kind of like the outer band, how it'll move with price action. And yeah, it was a good white bar entry too. But I was in before that. But you're right. That was a good white bar entry, Wayne. These solid areas are my brick walls. These moving averages, I'm aware of them. I won't trade directly into them. But if I get to the other side of that one, I feel pretty good. I don't know how I feel about 30 points of risk with just that little bit. But because I'm on simulator and I'm just practicing following the rules, it fit the rules. And those triggers were still up until further. No worries, Paul. No worries at all. And then Victor, Do you see how we never got the bar below the 1-to-1s? So not really bouncing from midair, rather just a little overrun on the 1-to-1s and then coming back above. I'm getting to it, Jen. I promise. Cool. You're welcome. So Jen says those pink 1-to-1s on the S&P. So the idea on these 1-to-1s, Jen, is they're what's called a small swing 1-to-1. I am, Sergio, absolutely. And usually when someone asks me that, I screwed something up, and today I didn't. Woohoo! So small swing 1-to-1s are exactly what they sound like. They're created from much smaller movement. So on the S&P, on crude oil, they will line up with key areas every now and then, but the inputs that go into creating them, Jen, they really are kind of pretty insignificant. Yellow 1-to-1s are from much bigger moves, and you can see it here. And those tend to really have sticking power, those 100% Fibonacci alternates on a higher time frame. But the pink ones, and I think I did this the other day, you could go through and go to your pink 1-to-1s and just make them transparent, and you would never miss them. And then when I talk about areas that are significant, and we're talking about them on the large chart, you'll notice, hey, take care, Wayne. Great trading, man. A lot of good stuff. You'll notice that I don't mention the pink 1-to-1s when we're talking about areas on the large chart to be aware of. And then the same is true when we talk about entry points. I'm very specific on them being yellow 1-to-1s, Jen. And that is Ninja Trader. That is Ninja Trader. And that's what you're asking about, right? Ninja Trader? On TradingView, because these are bigger moves, these minute bars, these pink 1-to-1s are rock solid. And you have to be aware. You're welcome. Good question. Good question. And now we're just right into resistance. So we're waiting for the break and then the pull. Waiting for the break and then the pull. When you know your rules, you'll call your shots long before they ever happen. And I think if you get in the habit of doing that, and if you're looking at your chart right now, your thought process can go to smaller font. You can say the triggers are up, and you can say there's room. And then over here, or for the small chart, you can say, I need to break resistance, pull back to it, then look for an entry. And if that doesn't happen, at this area right here, if it just drops down, you know where the next areas are already before it ever happens. And it's from playing out the idea that I know where trouble is, I know what my rules say, I know what needs to happen, and then it's really learning how to sit on your hands until it does happen. And that's the hardest part about trading. I say it 100 times a week. The most difficult thing you will ever do in front of this software is absolutely nothing. Because nothing doesn't pay, right? Being idle doesn't pay. But I've never seen anybody blow out an account waiting for the perfect trade. Doing nothing, not in the market when they shouldn't be. It's kind of like if you don't get in the ring, you don't get knocked out, right? You can't make money, so make sure you pick your fight. There's the full bar above. That's your break. So now we're waiting. Now we're waiting to see. I've got momentum. I'm on the strong side. I've got room to trouble. There is a trade that says a snapback to the HVA is what we call a momentum trade, as long as we have strong triggers. Some of you like it, some of you don't. A snapback to this is also a momentum trade. Some of you like it, Some of you don't. It's totally up to you. Pete? I bet it revolves around momentum. Not really. Missed a strong top by a tick. Triggers rolled down. Flat triggers, Pete. Not a strong top. Makes sense. Didn't work. You took the shot at continuation down, which is also a good shot, Pete. That second lower divergence, it could have pushed down. It just didn't. Just don't always work. Triggers up. Area breaks. Price pulls back. Close above. Doesn't work. Yeah, well, the triggers are going up, right? So the triggers are going up, Phil. You can't fight triggers that are already going up. Great weight on the break, pulls back, and you take the breakout attempt, and they don't. And it just happens. So you and Pete both, congratulations. You took trades that make sense and didn't work, and it's just a part of it. Aaron, did you go short right here? Didn't work? Same feedback as Pete. Everything says down. The momentum is good. No, you're good. Good stuff. Great entry. I'm assuming you got in around 80, maybe even lower. Stop where the market shouldn't go. Why? Okay, so here's the coaching. Are you ready? Here's your good coaching. You're going to dig this. You are going to dig this. Losses are a normal part of a positive equity curve, Phil. That's the phrase. So, Aaron, here's our triggers. Love it. There's your area inside of triggers. Love it. So the top of your triggers, right here. We're going to save you a couple bucks, Aaron, should you decide to follow the KISS plan management. The top of the triggers are right here at about 80.50, which means my stop is at about 81.75, where the market shouldn't go. And that is a 1.5. That's 75 bucks per contract. Because once you get that far beyond the triggers, it's just over. The advantage isn't there anymore. Does that make sense? So the same reason we insist on areas inside of triggers is the same reason no entries are taken on the other side. So you don't have to put those giant stops on there. Put it where the market shouldn't go. If they hit it, that goes back to that whole cost of doing business thing. It's a good looking trade, man. It's a good looking trade. And there's nothing more frustrating than taking the right trades and losing them as you're learning to take the right trades, because you will question things. You did. Great job. There is no separated enough. So Aaron, I just read that. Reflecting on it wasn't a good momentum look and the triggers weren't separated enough. So I'm going to disagree with you, and let me show you why. Let me break it down for you. You ready? Remember when I said that that separation is strength? Aaron, have you heard that in the beginning when we're talking about strong triggers? Do you notice that I didn't say big separation or huge separation or lots of separation or gigantic separation or overwhelming separation? I've kept it so stinking basic. Separation is strength. So from that smallest point right there, your rules are met, Aaron. If the smalls are above the large, if the large are wide in the direction of the trade, that's rule one met. All the way up. The whole way. And once the colors match, that's rule one met. And rule number one is still met with that tiny little bit of separation there. And then Aaron, when it goes away, so does the advantage. And that's that black and white thinking that keeps you focused on the rule being true and the language keeping you focused on the rule being true. So you'll do this a lot in the beginning. If you lose a trade, you'll start trying to find reasons why it didn't work. And sometimes they just don't work. Sometimes good trades don't follow through. And it stinks, but it's because somebody with a lot of money right here wanted the market to go up. That's it. That's the only thing. And they don't send out a memo. So great job. Odds favorable. Where's your entry, Nathan? The yellow bar. Right here? Did you go long or short? So, all right. What kind of trade is this? High probability? Or are we paying attention to the divergence low there? That the large triggers didn't break? See that cyan line? Right there? We did. And I said, the conversation that we had, Nathan, was this is such a high impact area, such an important area, such an area that can create problems. Are you really going to ignore it because the market got one bar through it? I hope the answer is no. The same way with one-to-ones. If these one-to-ones stop printing and I'm 2 bars away, somebody knew about that number. Somebody created that number. Somebody recognized and built, and man, that number is there. Your software will pull it out for clutter a little bit. Does that make sense? So if it's high probability, this is 100% perfect. 100% perfect. Stop above the pivot. I don't know how far down it went. In at 46.50. So it probably just missed $100. I don't know. Are you doing the $100, $200 thing right now? Yeah, so it just missed that $100, huh? Stop above the pivot. It's perfect. Assuming it's a high probability trade, flawless execution, Nathan. Good job. Sometimes they lose. Sometimes they just don't win. I would say if you see a divergence low, why would I wait for a confirmation bar? If you have odds favorable and a clear path, why would you wait for confirmation? Oh, a refresher on when I would. Let me think about how to phrase it. And let's use your picture. Here's my midband, right, Nathan? And let's just assume it's perfect. And my stop has to go up here, and that's approximately 20 ticks, 25 ticks. It's a lot of risk, right? I may not be comfortable with that number. So if I get a reversal bar in the direction of my trade from an area, I can put my stop above that pivot. That's one way to reduce risk a little bit. That makes sense. When there's a huge range and your stop has to go to the other side of it, confirmation bar makes sense. Yeah. But over here in the perfect trade, all confirmation does is it gives you a lot more risk than you needed with the perfect entry. Good question. Thank you for that. Does that make sense? Yeah. And then I think a good lesson that we can take from this one is that I have way too much stuff open. But if I see a divergence high and it stops printing, I'm going to give it a good, because there's different factors that make it stop printing. But look at how long it holds. It's a key number, right? Because what is divergence? And let's talk about that. So divergence is an exact point where the sellers are in control. The sellers are gangbusters going south, and everything is seller, 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 seller. And right at that price, the buyers said, you know what, guys? We want it to go up, and we're stealing your momentum. And what this divergence line does is it gives you a visualization of that price. And it lets you know, hey, that's an important price. That's a price where decisions might be made. I love this lesson, Nathan, but the software can't have these lines running out for days, right? So the software has an algorithm in there that maybe when you get a bar above, it stops printing, right? Or maybe when a trigger line gets above, and I don't know exactly what it is, that's when it stops printing. But Nathan, check this out. Where did that market stop? On a dime. Even though, hold on, that line stopped printing. Pretty freaking cool, right? And you knew about it. I love this stuff. And that's kind of how I think of them. This is an impactful area. And the software may stop printing, but it hit it to the tick. And I think that that's pretty cool. Let's see if we can find some more. And then there it is right there. And this one is still in play, and you can see that it's impactful. And then what does this one say? And this may be a little longer than you want, right? But if you draw a line off of that pivot with divergence right where the sellers stole momentum from the buyers, there could technically be a reaction there. If I'm looking left at that pivot, at that loss of momentum, I'm not gonna skip this trade, right? If it fits my rules, but I might get my management guard up a little bit. And that's kind of next lesson. That's a little further in. But if it's only 1 bar's distance, lean on that a little bit. I think you'll be surprised and pleasantly surprised with how it has you rethinking a couple things. Good stuff, man. Good stuff. Not that I'm going to do this live, but if your pullback on an otherwise great 50-50 has divergence, you can do whatever you want. Did you know that if I gave you brownies for your birthday, but I told you that I pooped in them, you could still eat them? Just saying. Well, Nexgen rules aren't your rules. That's important that you understand that. Now, I do hand you a plan designed to optimize your chances of success, Nathan. And in the 50-50 trade that optimizes your chances of success, sorry, Trina, it says 3 triggers through. You already don't care. No, this isn't out of the scope of class at all. So you're saying you have a strong top or bottom, you have 3 triggers through, you've got strong triggers on both chart, and you're considering taking the trade. And the KISS plan says don't do it with divergence. Right? Everything perfect except divergence. Well, then you make a choice. What's going to give you more risk? Because if it's a 50-50, Nathan, hold on, let's go small chart real quick. If it's a 50-50, chances are, let me find an example of a 50-50. Here we go. If it's a 50-50, you could say, I'll wait for confirmation, right? I'm trying to find a better example of a 50-50. Hold on. I'm going to find it, dagnabbit. So, medium probability trade. I can't find a good example. Here we go. If I'm in a medium probability trade, let's just pretend like this is a 50-50, okay? And let's just for grins say divergence printed right there. If I'm in at the area on a trade that already isn't perfect, which risk do I want? Do I want this much risk on the confirmation bar? Or do I want this much risk getting in at the area inside of triggers? Which do you think is better? Higher risk on a trade that you already know sucks, but you're choosing to take it anyway? Doesn't it make sense to have the least amount of risk as possible? But then let's back up one more. Why are you taking sketchy trades? What is it about the right trades that has you so off put that you want to be in every trade? Okay. You could wait for that confirmation. So, but there's different thoughts, right? What does confirmation say? Confirmation says that the buyers got back on board. That's nice. But it also increases my risk, which means that when the second divergence prints and I take my exit, it's a loser. If I got in at the area, I made a couple ticks. So you're going to have to go through that, man. When you start breaking rules, I would say take a lot of pictures. Take a lot of pictures on whatever rule you are rewriting. Because when you guys change your plan based on one instance, you're not establishing an edge. Newbiz, for the Fibs Pro Trader and Fibs Pro Trader send new indicators, do you wait for the triggers to pass through all of the fib levels, even if the levels differ? Absolutely. Great question. Let me show you a picture. So here is the basics. Here is the basics. And I'll drop this in the room. So reach a line, count your triggers. And are you comfortable with that, Newbiz? Reach a line, count your triggers, reach a line, count your triggers. There's going to be times, and it's a colossal pain in the butt. I know that it is. But there will be times, let's find a good example. That's a pretty good example. Where you hit support and the triggers don't break and you finally get the potential to break and then they hit the next area and you're like, oh man. And then you get that potential and then they do break. And there's going to be times where you're just kind of stuck like Chuck and you're waiting. So when you get those multiple levels, what happens is just plan on being a little patient because they're all impactful. Like they're all key areas. And sometimes there's enough movement in the market to create multiples, right? Like that fib and then that fib and then that fib. And there's really just a whole lot of nothing to do here. Which one are you going to take a chance into? Does that make sense? Does that answer the question okay? That's a good question. I even have a picture that is, it's funny, when we talk every day in the room about termination conditions, I pull this picture up in the room where there's actually going to be times where you just can't seem to get that clear path like you want to. And you're going to be forced to either follow your rules or break your rules. And sometimes you'll get away with it, but more often than not, you won't. So you have to lean on the idea of an edge, right? I have an advantage. I have a pattern that I can prove wins more than it loses. Slightly confused first because you didn't know which of them were important. No, and here's the cool thing. Thank you for saying that. So on your large chart, oh, Nubis, you just created such a beautiful lesson for the room. Thank you. So on your large chart, you actually have Fibonacci levels from 3 different areas. You have your 5-1 chart, and that's our entry chart. Let's make this a good color. And then you've got these fatter ones that are the 21-3, which is an even higher time frame. And you'll know that they're 5-1 and 21-3 because they don't extend off into the wild blue yonder. And then you've got the ones that do, and those are for the 13-2. Those are native to the large chart. And one of the things that I did a lot, and I see a lot of people doing it, is they try to rank them or sort them, or this is more important because it's a 21, it's stronger than a 5-1, and a 5-1's not as strong as a this or that. And the reality is, and I love this picture, and I don't know if John Novak did this on purpose, but right here, yellow 1-to-1 stop the market with termination condition rules met. And right here, it was a divergence low. And right here, it was a 21. And here, it was a 5-1 and a divergence low. And then here, it was a 5-1. Here, it was a 13-2. And what's amazing is that they're all equally as important, which is why when people don't run their synthetic fibs on the large chart, it's like, I don't know, driving at night with one eye full of cataracts and the other one covered. You don't get the big picture. And they are all important. Every line on your large chart can create a bounce. And that's why I don't waste my time trying to rank them, trying to sort them. I don't waste my time saying this is more important than that. I just say this pink line could stop a market. And until my triggers get through, I'm cool doing nothing because I'm in this business to make money. I'm in this business to be consistent. And you'll ask 100 times, how do I break my rules? Nope. Good question, Nathan. Do you remember the trigger counts? So when we're doing the trigger counts, 0 triggers through as a termination. You're welcome, Nubis, right? And then it's 2 that shows the potential. So Nathan, for the sake of not creating confusion between 0 and 2, if it's more than 0 but less than 2, round down. It's 0. And I go back to the analogy or the horrible metaphor. Think of your trigger lines, your small triggers, as a car. And if both the front end and the back end don't get through the area, the front end made it, but the back end didn't, just assume that they didn't go. Good question. I'm telling you guys, it's y'all's amazing questions that make this room. Coming in and go, man, I had this on my mind. Let me ask it. Let me see how this long-winded SOB can answer that question. And guys, 2 triggers through, right? Nathan, no strong bottom, only 2 triggers, divergence printing. I don't know what it's going to do, but man, that's an ugly look. Yep, and this is where you just say, probably not my money. All right, guys, I'm going to shut down YouTube.